Hello and welcome back to a very bullish crypto. Oh my God, the markets are rip roaring. However, while all of this positive price accrual is happening, one of the OG blockchains, the privacy king himself, Monero, is under attack. A proof of work 51% attack. I think it might be the first time it's happened in the wild. Let's dive right into it. Boom. Let's introduce the first player. Monero is a long-standing chain. In the world of crypto, when people say, oh, Bitcoin is for criminals, no, not really. Bitcoin is actually often called criminal futures by the powers that be, because if you do use Bitcoin for illicit money laundering, when you try to cash out, you will get caught. Now, on the flip side, Monero, unlike Bitcoin, doesn't maintain all of those transactions and those asset swaps or those token sends or just even peer-to-peer exchanges as transparent. Monero obfuscates all of that. So Monero is really what you use when you want to send private money. And this has been the case for many years. Monero has been around almost as long as Bitcoin, and that's saying something. Now, what is Cubic? Cubic is built for a purpose: to host a fully on-chain decentralized AI model, AI Garth. To achieve that, the chain was designed to be extremely lightweight, running out of the RAM of its validators. That means, you could use it on like a laptop or something to that effect. It functions as its own operating system, features innovative quorum consensus, and it has the ability to utilize mining power for other purposes rather than wasting it on simple hashing. Useful proof of work. And useful proof of work is something that I honestly haven't heard since like 2017. As part of its useful proof of work design, Cubic needed to implement the first stage of outsourced computations and test it in the wild. Now, look how open they are about this. How crazy is this? This new chain is basically saying we're launching something that can also take over other proof of work assets. Now, the experiment, the Monero mining initiative, began as a proof of concept. In the initial phase, Cubic split its resources between mining Monero and training its AI. This approach proved highly profitable, at one point becoming nearly 3 times more lucrative than direct Monero mining and attracting a torrent of new compute to the network. Now, this is really important because they don't take it over themselves. What they actually do is alter the incentives of their nodes. So other people running machines were starting to see that the value of the qubit pool was increasing, and they started to contribute their processing power to this mining pool. Now, the experiment was strategic. It was at times combative, application of game theory. The whole idea is explained here. Previously, Cubic would sell all mined Monero for USD, then use the proceeds to buy and burn Cubic tokens to reduce the circulating supply. So a pretty interesting buy and burn model, which is to vampire from another successful chain. Let's keep in mind, Monero has about a $6 billion market cap. Cubic is in like the millions of dollars. So a much smaller chain is just vampiring away the value from a much more significant chain. They did alter that away from the burn through a decisive vote, and it is now decided that only 50% of the proceeds will be burned. The remaining half is distributed as an extra bonus to Cubic's chain validators. Now, this was key. This 50% proceed distribution to validators got other Monero validators to join the Cubic pool. So there's a lot more going on here. If you really want to dive in, I don't want to read everything out to you, but it is kind of wild. The final successful push begins on August 11th. So on Monday, they really won the full 51%. And they actually have a blog where they kind of go over the day-by-day events of how this worked. The final phase was the deployment of a more sophisticated selfish mining strategy. And let's come into terms with what selfish mining is. I have this Investopedia overview in the sources if you want to read it, but this is coming really from Emin Goon of Avalanche. And again, Goon is also referenced in the Bitcoin white paper itself. So he knows a thing or two about this, coming from Cornell University and in cryptography. And he talks about selfish mining as this process where a miner gains enough of a hash rate that they fork the protocol. And when they generate a block, they actually hide it, and they are able to introduce it back into the blockchain when they want, when it benefits them the most. So they can make a block that really suits their need and introduce it into the blockchain itself. This is something that requires that 51% attack where they are controlling the consensus, right? Their consensus is basically going to be that what we say goes and what everybody else says does not. So pretty wild. Now, as we get to the bottom, they've got this historic timeline of events, and you can see the hash rate max. So this is all kind of fun. And we can start from 169, 171 to 172. And you can see that as they begin this operation, their hash rate just continues to climb. Now, with the 172 epoch, you have a really interesting breakdown, which is that profitability against peers. This is what they were talking about when they switched over to taking 50% of those rewards and distributing them. This just got the cubic mining pool to get so much larger, right? Other miners saw this profitability and they said, hey, we want some of that. So in many ways, this is just beyond technical. This is also a social attack in some senses. And we can see that as they begin doing this, their hash power obviously goes up and down. Now, what is happening as they launch this, they're pretty open to everybody. They're talking about it. They basically say that none of this will be unannounced. They want the Monero community to be aware that this is happening. And what occurs is that the Monero community actually begins to fight back by DDoS attacks, distributed denial of service, meaning that their IP addresses just got slammed with so many pings and requests for activity that it basically bottlenecks their servers. And then there's this amazing day-by-day breakdown inside Epoch 172. So at August 1st, they begin to do this, right? It picks up steam. It begins to experience these DDoS attacks, which means that their developers are going to be working day and night to fend off this bottleneck approach. And it gets more and more aggressive. This begins to persist, and obviously the Monero community tries to fight back. So Monero itself, through its distributed operators, it begins to reportedly counter by listing cubic public node IPs on sites like abuseipb.com. You can see through the Monero hash rate that they have successfully taken over 51%. Now, what this really means is that they can only include the cubic miners in the Monero blockchain. So any new block being introduced by a miner that is not cubic will automatically be rejected because, again, they have more than 50% of the group consensus. Now, this is where a full takeover happens and is pretty fascinating. When we look into some of the insanity, they gain full control of the network. It's essentially cubic mining now. They paused. They said, actually, they choose not to take over yet. This is in some ways, again, like a theoretical experience for them. The only thing is that they're winning. So now that they've successfully pulled this off, like, who really knows what they're going to do? And we can begin to see there's a fork, right? What we can see here through some of the blocks themselves is just forks and rejections and orphaned blocks, which is what's going on over here, and just chaos on the chain, right? This should be one agreed upon chain. Obviously, everything being sent over here is getting rejected, and there is some sort of control and splitting. We can see forks just continuing. Now, what does the economic cost of this? To do this to Bitcoin would be just utterly insane. In fact, Wences Casares back in the day tried to do this in the early stages of Bitcoin and was unable to pull it off. That's what led him to develop a lot of early Bitcoin technology and go all in. Now, Ledger's CTO, Ledger, the little storage device, claims this cost Cubic $65 million a day. But coming from D Daddy Bayo, he's actually saying that if you take the math and you add it up, it's really more like $109,000 a day. And when we look at this, we can go back to this Epoch 172 revenue, right? They're pulling in 517 XMR and 6 million XTM, which is lower than prior earnings due to the DDoS attacks. Half of the XMR was sold for Cubic, buyback, and burn, while the rest rewarded computer miners. So what they're looking at is that the Cubic's custom mining generated around $141,000 by selling the 517 XMR into the market. This resulted in half of that being burned for Cubic and the other half being distributed. So obviously, at operating at $100,000 a day while only getting about 70K out, that's not crazy, but that does mean the cost is only $30,000 to maintain this attack. And if this is increasing their Cubic holdings, I mean, they could easily be pumping the Cubic price while offloading some of their own to facilitate this. Anyway, there's a lot of ways that they can go about it. Maybe they just have enough money to sustain the attack. And the fact that they've done this shows that they are now totally in control, and it is very much on their whim if they want to maintain this or release this. But now that it's happened, I mean, how can anyone really look at the Monero blockchain and say this is effectively decentralized and that we actually trust its output? This has all been just an absolutely wild outcome by Cubic, fastest blockchain ever, of course, audited by CertiK. But look, they talk here about forget proof of work. The useful proof of work transforms the energy used in mining into something greater, artificial intelligence. And maybe this is just an amazing proof of concept or a massive advertising campaign to show that they can not only both do proof of work and AI simultaneously. Frankly speaking, useful proof of work to me is awesome. It was something I pursued back in the day with Bitcoin, and it kind of fizzled out like after 2018, stuff like that. It could be something great. Obviously, if we could use that computational power for two things at once, that would be absolutely fantastic. So it's really hard to tell what exactly is going to happen with Cubic, but They do say public announcements for every move, allowing Monero to prepare defenses, no surprise attacks. Start with a pure 51% dominance attempt, which they achieved on Monday, and then shifting towards selfish mining, which requires only 33 to 40% hash rate. And that's because, again, they fork it, they run a side chain, and once that chain overtakes the public one, they can really introduce whatever block they want. So increase marathons to 3 per week during the experiment. I mean, it's hard to tell exactly what they're going to do with this, but man, oh man, is this absolutely wild. It is a useful anti-fragility stress test to all blockchains out there. Now, is this something that could apply to Bitcoin? Highly unlikely just due to the costs. But what about Bitcoin Cash? That's still a pretty big network. What about Litecoin? What about Doge? Doge is proof of work, and it has a ton of value in it. So is this going to stop at Monero? Will Monero come out of this and maintain itself as a blockchain, as a distributed ledger? Very tough to say. Monero is important to privacy. It's very censorship resistant, and it has had its own little function in the world, whether it be for good or bad. But it's tough to see this happening to such a well-credentialed OG. Anyways, I've got this all in the sources. If you want to dive deeper, I'll stay up to speed on what's going on. It's quite fascinating and educational in the blockchain space. We don't usually see these things go beyond theory to be enacted in the real world. With that being said, enjoy the pump. Don't over lever. Stay safe out there, and I will see you tomorrow.